Reddit recently reported earnings and beat on revenue and net income. Let's evaluate whether or not buying the stock at today's price could make sense. Let's look at their numbers first. They made a revenue of $2.2 billion with a net income of $529 million, which already gives them a profit margin of 24%, which is pretty good considering they haven't been profitable for long. And they're currently sitting at a price of $134 with a PE of 52. So the market is very interested in this company, giving it a very high price for potential very high future growth. But if whether or not it is worth to buy the stock at this price, let's look at the two different cases. A bear case first with an analysis of 5 years. They have had a lot of explosive growth in this last year, and they are expected to keep growing at 20+% for the next 5 years. So in a bear case, I would assume this growth slows down a bit lower than the expected value, that certain AI plans aren't going through, that maybe the ad business is taking a hit for some reason. But I would still assume that their profit margin increases. Let's give them a 29% profit margin. And they announced their first share buyback program, so I give them a share dilution of -2%. And giving them a PE is a bit difficult considering they are such a young publicly traded company and still show such high growth. So I'm expecting that even at their lower estimated revenue, they still be trading at a very respectable 22 PE. These assumptions would take the stock price to a price of around $185, which would give them an annualized return of 5% if bought at today's price. But in contrast, let's look at a bull case too. Same 5 years, but this time their high expected 25% of revenue growth, a higher profit margin of 34% for a mainly ad-driven business, and a share dilution of around -1%, considering that the price would be much higher in such a good case. And I would give them a PE of 30. I don't know if they can sustain such high PE, whether or not they can remain a premium company. But if they keep growing at 25% for a couple of years, I think they can definitely justify the PE, at least for this time period. And these assumptions would take the stock price to $376, which bought today's price would give them an annualized return of 21%. And if we combine these two cases into an average, this would take the stock price to $280 with an annualized return of 14.15%. So these numbers are looking quite respectable. I'm certainly interested in the company at this price, though I'm not too sure whether or not my numbers may be a bit too high, a bit too optimistic, a bit too driven by their current win in their recent earnings. So I would maybe take a bit of a step back and go in a little bit deeper whether or not these numbers really are realistic to achieve. And other than that, I would definitely want to hear what you guys think about this company and these numbers. And I will see you next one. Bye.